In this episode, I'm about to reveal the biggest mystery in trading history. No more second guessing, no indicators, and no complicated setups. In less than 10 seconds, you will notice exactly where a market correction ends. Right here, here, or even here.
The power of the sun in the palm of my hand.
Every trader must understand when a trend is ending and ready for another leg, or it's about to completely reverse. Once you learn how to do it, I'll hand you a powerful setup to trade it instantly. And we're gonna do all this using Fibonacci.
You serious?
Stay tuned till the end and let's dive straight in. You need to go to Tradingview.com platform. Once you're there, head over to the Tools section and pick Fibonacci retracement. Once you do, click on the chart and drag all the way down and right. This Fibonacci default form looks extremely horrible. So for some major modifications, double-click on Fibonacci. Uncheck all the levels except 0 and 1. Then add 0.44, minus 0.27 and minus 0.13. For the rest of the changes, follow my steps. After all these changes, it's crucial to save the settings in the template. You're gonna know the reason for this later on in the video. Finally, this is the Fibonacci we're going to use. Applying Fibonacci retracement on a chart is more problematic than you think. With a quick search online, you'll find countless videos on the subject, yet almost all of them are teaching it completely wrong. Here is how you do it. In case of an uptrend, you need to click first at the very beginning of the trend, followed by the second click, which must be at the exact end of the trend. Go ahead and apply the Fibonacci. But here is the kicker. The end of the trend must be on minus 0.27 instead of Fibonacci 0. This is where the things truly start to shift. In case of a bearish trend, first click must be at the very beginning of the trend, and the second click must be at the exact end of the trend. Just like the previous one, the end of the trend must be on Fibonacci minus 0.27 instead of level 0. Let's explore Fibonacci magical value 0.44 and uncover its potential on how it's gonna help in finding market correction exact ending point.
How? Hold on, bro. How?
If you apply Fibonacci on a trend as I mentioned, you'll notice that the 0.44 level often acts as the middle of the trend. It tries to push the trend away to form another rally. The 0.44 is extremely crucial. Candles tend to react when touching this level, going in different directions. It's almost as if price pivots around this point, and after a few touches, the market finally commits, creating a brand new trend. So Fibonacci 0.44 level will always act as a checkpoint for the price, trying to push it for another leg. With all this being said, Fibonacci 0.44 can serve as an ending point of a base. However, there is a little problem.
No! God, please, no! No! No!
Once you apply Fibonacci on a chart and expect it to touch 0.44, you'd see candles just move on without touching it. Even though this is a big problem, but I gave you a promise. I'm gonna show you how to find exact end of the base, and I intend to keep that promise. So in order to find the exact ending point, along with 0.44, we're gonna have to use another Fibonacci. Yeah, just another Fibonacci.
Come on now, dog. Come on, man.
So pick the Fibonacci and apply it on the chart. For some tweaks, double-click on the Fibonacci. Uncheck Fibonacci minus 0.13 and instead of 0.44, add minus 0.618. Then you also have to save the settings. So this is the Fibonacci we're going to use along with the previous one. The concept is quite simple. There is a rally which is followed by a minor pivot, then a final pivot at the end. These two pivots combined form the base or the correction to the rally. In order to apply the new Fibonacci to this trend, first click has to be in the beginning of the base, which is the end of the trend. The second click, however, has to be on the low of the minor pivot. If you just apply Fibonacci as I mentioned, if price touches minus 0.27 or minus 0.618, then it will return and form another leg. The same goes for a correction of a bearish trend. There is a rally and a minor pivot formed, and finally another pivot. These pivots are actually the correction to the bearish rally. In order to apply Fibonacci, the first click must be at the beginning of the base, which is the end of the trend, and the second click at the ending point of the minor pivot. If you apply Fibonacci, then the final pivot will touch either minus 0.27 or minus 0.618. These two levels could be the exact end of the market correction. To set an example, your first click must be at the end of the uptrend, which marks the beginning of the base. Then your second click must be exactly on the end of the minor pivot. If you apply Fibonacci to the trend, you will notice candles getting stuck at minus 0.27 level, followed by formation of a strong bullish candle. This could signal the exact end of market correction. For this downtrend, click first at the end of the trend, marking the beginning of the base, and place the second click on the end of the minor pivot. If you do so, you will notice that candles get stuck at minus 0.27 level, which implies that this level could mark the exact end of the base. Let's combine everything to find the final way to pinpoint the exact end of the market correction. Starting with bullish trends. Start by applying Fibonacci 0.44. Then you better mark the Fibonacci 0.44 level, so your chart won't be so much crowded. Next, apply Fibonacci correction. These two Fibonaccis combined form an area between minus 0.27 and 0.44. This zone represents the exact end of the market correction with 100% win rate. You'll notice touches at the minus 0.618 Fibonacci correction, indicating the base has come to an end. From that point, candles will move on to hit a new high. So it's crucial to note, for bullish trends, if Fibonacci 0.44 is below or on the minus 0.618, there will be a next bullish rally for 100% win rate. Let me show you short position criteria. The market is in a bearish rally, and you're wondering if there's gonna be another rally at the end. First, draw Fibonacci 0.44 and mark the 0.44 level. Next, apply Fibonacci correction. You can obviously see the 0.44 level and minus 0.618 are at the same level. It's also important to mention that for bearish trends, 0.44 must be on or above minus 0.618. When this condition is met, there will be another bearish rally with 100% win rate. Watch the final example to see how you can start a trade. In order to master this magnificent trading technique, you need to watch all my Fibonacci videos. All of those videos are extremely rare and could change your trading life. I'll leave a link for a full playlist below in the description. So if you learned something new, then go ahead and like this video. It really means the world to me knowing my free content is making a difference. If you guys got any questions, go ahead and ask in the comments. I'll do my best to answer all of them. Until another episode, take care.